Good evening, everyone. Welcome to our financial series workshop. The Center for the Women of New York. I'm Cecilia Venusta-Weigel, president of the center, and with us tonight is Kathy Carroll, also Lana Berluitz, who is helping behind the scenes. Thank you so much for joining us. The Center for the Women of New York empowers, supports, and advocates for women who face financial, housing, food insecurity, health, violence, social, emotional, or legal problems. We help them by understanding their needs and connecting them with the CWNY services and nonprofit partner organizations and city agencies they need to overcome their challenges. We have two locations. Let me go back. One is in Queensboro Hall, one is in Bayside for Todd, that's in Queens as well. We are a nonprofit organization dedicated to women empowerment and gender equality since 1987. CWNY's volunteers, members, sponsors, advisory board, directors make CWNY's mission possible. Anyone is welcome to join us as members, as volunteers, just reach out. There's always a lot of many initiatives to work on. These are our programs now. We have the referrals and advocacy program. So if you don't know if we have a service, we're here to guide you in the right direction, to connect you with the service that you need. We have these series of workshops, the financial literacy one, career workshop series, Women in Crisis Support Group, Caregivers Support Group. We are doing a one-on-one tax preparation assistance for the first time on Wednesdays before the tax season is finished. We have an ESL class for beginners, and we have a legal support team that answers to inquiries via email. We're looking into changing that to in-person now. Again, like today, we're going to be doing the income tax prep, continue from the last couple of months. Kathy Carroll is here with us. Thank you, Kathy, again for being with us.
You're welcome.
If any of you would like to share this event with someone else or look at it or watch the video again, you can find the recording whenever it's finished, it's edited, which is in maybe a few days. It will be up at cwny.org/past-events. And if you have a question, please feel free to put it in the chat. Your questions will be addressed at the end of the presentation. And if you dialed in, you can email your questions at events@cwny.org. And Lana will be monitoring our email and will let us know if you email a question. Again, welcome, Kathy. The floor is yours.
Okay, welcome and thank you for joining the webinar. The 2022 tax season is well underway. In general, tax returns for 2021 are very similar to 2020, with a few rule changes. An exception to this is in regard to unemployment. In 2020, the first $10,200 of unemployment was not taxed by the federal government. For 2021, all amounts of unemployment are fully taxable on both the federal and state levels. For those taxpayers who have not had enough tax withheld from either the federal or the state on unemployment, this will mean either a decrease in your refund or possibly having to pay some tax. And one of the problems that I've been encountering with some of the tax returns that I've done is that on unemployment, they allowed you to withhold state tax, but there was no provision for withholding city tax. So a few people already have had to pay just because if they live in New York City, they had no option to withhold the city tax. So that's an issue that's come up. The results so far. So far, the processing of 2021 returns seems to be going smoothly. So far. Returns that are e-filed and refunds direct deposited. The process is taking about what the IRS advertises, which is about 21 days from the date that the e-file goes through. Sometimes it's taking a little longer, but this is all good for the taxpayers. So hopefully this will continue for the remainder of the tax season, as there's still many problems going on with the 2020 returns and even some 2019 returns. So hopefully they'll get through 2021 okay and be able to straighten out these issues with the 2 back years. I wanted to say a word about stimulus payments. If a taxpayer did not receive the $1,400 stimulus payment issued in March to May of 2021, it can be applied for on the 2021 return. Last year in the 2020 returns, you were able to apply for the stimuluses, the earliest stimuluses, the $1,200 and the $600. This year, you can only apply for the $1,400 one if you didn't get it. But now what the IRS has been doing, they've been sending out a form 1449C, but it's actually a letter, it's not a form. And it tells the taxpayer how much they received in stimulus. The letter refers to the stimulus. We all call it the stimulus, but the IRS calls it an economic impact payment. So when you receive this letter, it says EIP on it. And then on the tax form, it's called the recovery rebate credit. So this is causing a lot of confusion. So this is what the letter looks like, the 1449C. So it seems like most people have received it, but a lot of people don't understand what it is. And a few clients of mine got concerned because they had already done their taxes, and then they got this letter and they thought it was something they had to pay more tax on. Like basically it's not written that clearly. So if you get this letter, it's just a statement of whether you received the $1,400 stimulus or if you receive some other amount, just to state what you got. It's not taxable. It's just to let you know, because if you didn't get it, then you can apply for it on the tax returns that we're doing right now. What are credits and deductions? In last month's webinar, we were introduced to the most common types of income and the documents that people typically receive to report it. Obviously, by now it's the middle of March. Everyone should have all the documents that they need to do their taxes, including if anyone has stock statements. The brokerages are sending out the final stock statements like right now. So basically at this time, or maybe by next week, everyone should have any document that they were waiting for. So the basic documents are your W-2 from your job for wages, a 1099 NEC if you have self-employment or if you're an independent contractor, or a 1099-G if you were collecting unemployment in 2021. The 1099-G, as we mentioned in last month's webinar, has to be gotten off the Department of Labor website. It is not going to be mailed to anyone. And for people that haven't collected unemployment in a while, you have to remember your password and your user ID for the Department of Labor in order to get into the website and get your 1099-G. For all of these types of incomes, there are tax credits and deductions that will help to decrease the tax that one has to pay and increase refund funds for others. The terms credits and deductions are both money savers for the taxpayer. Many taxpayers can benefit from either one or the other, and sometimes both. A credit will directly reduce your tax on a dollar-for-dollar basis. Some credits, such as the Earned Income Credit, the EITC, and certain education credits will even refund you the amount by which the credit exceeds your tax liability. A deduction, on the other hand, is an allowable item that will reduce your taxable income so that your tax liability will be lower. Deductions do not reduce tax liability on a dollar-for-dollar basis, Rather, the benefit is based on the individual taxpayer's tax rate. Deductions are an allowable amount that reduce one's income in arriving at taxable income. All taxpayers may choose to use the basic standard deduction to calculate their taxable income. Most taxpayers will have to use the standard deduction if their potential itemized deductions do not exceed the standard deduction. The standard deduction is the basic amount allowed to reduce the amount the standard deduction is the basic amount allowed to reduce income. The amount of the standard deduction is based on one's filing status. Under the TCJA, the Tax Cuts and Jobs Act, which came into effect in the 2018 tax year, the standard deduction was raised significantly. The following amounts apply to the 2021 tax year. The single taxpayer, the standard deduction is $12,550. Married filing jointly, $25,100. Head of household, $18,800. And married filing separately is the same as single, it's $12,550. These amounts increased very, very slightly from the 2020 standard deduction amounts. Itemized deductions are a list of specific items that, when grouped together, will lower your taxable income if they exceed the amount of the allowable standard deduction. For example, if a single person has itemized deductions in the amount of $13,000, it would be beneficial for them to use this amount rather than the allowable standard deduction of $12,550. The process is not as straightforward as it seems, however. We will see that shortly. There's different types of itemized deductions. These would be reported on Schedule A of one's tax return. The itemized deductions available to taxpayers include medical expenses, which include insurance premiums, out-of-pocket expenses, co-pays, vision and dental expenses, travel to and from doctor's offices, including the cost of taxis and other kinds of transportation, are also deductible. However, your medical expenses must exceed 7.5% of your income before you can use any of the expense, which is changed from last year's 10% of income limitation. So they lowered the limitation a bit. So it might be a little bit more likely someone could use the expenses. For example, if your income is $50,000, your medical expenses would have to exceed $3,750 before any of the amount becomes usable. And then only the difference between the amount and the base is counted toward the deduction. Other types of itemized deductions include state and local taxes that are withheld from one's pay during the year, as well as any balance due that one paid on a prior year's state tax return. That would include, let's say that someone had gotten a bill from a back year. Taxes work on the cash basis. So if you had gotten a bill from New York State, let's say for taxes owed in 2018, 2019, and you paid them in 2021, they would also be deductible in the year that you paid them. Real estate taxes. These two itemized deductions are referred to as SALT, state and local income taxes. The SALT deduction is currently limited to $10,000 per taxpayer. There has been much controversy about this limitation, especially here in New York and other high tax real estate with high real estate taxes. That includes New Jersey and Connecticut. But in fact, the SALT limitations impact only about 10 states in the whole United States. So despite recent discussions in January, they're talking about rolling this back, going back to the previous setup where all your state and local taxes and real estate taxes could be deducted. Nothing happened with it. So the limitation of $10,000 for state and local taxes and real estate taxes is still in effect. Mortgage interest is deductible. Mortgage interest includes interest paid to banks and private lenders and includes points and origination fees that one may have paid on a purchase. If you purchased a home this year, you should look at your closing statement, as you may have paid mortgage interest and real estate taxes that may not appear on the Form 1098 that you get from your bank or your lender. So there might be a lot of additional deductions on the closing statement in the year that you purchased the house. So that's important to have. Charitable contributions can be deducted for both cash and non-cash items. If a cash contribution of more than $250 is made to a single recipient, such as a church or charitable organization, a receipt is required to be kept in your records. Non-cash contributions, such as clothing and household items, must have a receipt for contributions in amounts of over $500. Under $500, you're pretty much allowed without having a receipt. Many people believe that in the case of a non-cash contribution, the organization will let you know the amount of what your contribution is, and that's not the case. The organization will only provide you with a receipt saying that the item was donated. It is up to the taxpayer to estimate the amount. Charitable contributions have always been a favorite itemized deduction. It helps taxpayers save money and it assists those that need our help. In 2021, which was continued from 2020, people that did not itemize may deduct up to $300 for charitable contributions, and that's $600 for taxpayers filing a joint return. So it's $300 each. So even if you are not able to itemize, you can still use up to $300, $600 if joint, of charitable contributions to reduce your taxable income. So that's if you're using the standard deduction, you can still take either $300 or $600 in addition to the standard deduction. With the introduction of the TCJA, the deduction for miscellaneous job expenses such as union dues, work clothes, work tools, work travel, job-related education, and other items of this type have been eliminated from nearly every type of occupation. So there is no longer a need to hang on to small receipts for items of this type, as they are no longer deductible. That's on the federal return. The exception is that teachers are allowed a $250 adjustment to income, not a deduction, it's an adjustment to income. So that directly reduces their income by $250 for their purchase of school and classroom supplies. This includes the purchase of COVID-related items in 2021, if anyone bought masks or disinfectant or things of that nature for the classroom, that's part of the $250. Additionally, it may be possible to use some job expenses on your New York State return, but the limitations on these expenses make this unlikely, because New York State has a different set of standard deductions and a different way of calculating some of the deductions. So we'll get into that, the New York State return, in next month's webinar. The bottom line on itemized deductions is this. Due to the limitations placed on them, limit on medical expenses, salt cap, and so forth, most taxpayers will not be able to itemize and will use the standard deduction. Itemized deductions can be most frequently used by taxpayers who own homes and have significant mortgage interest to deduct. Okay, now we're going to address credits. Unlike a deduction, a tax credit can save a taxpayer money on a dollar-for-dollar basis. In some cases, if your tax is reduced to zero by a credit, you may be able to receive the additional amount of the credit. This is known as a refundable tax credit because they're going to refund you the difference over and above the elimination of your tax. A quick overview shows at least 20 credits, non-refundable, available to the average taxpayer. These include the earned income credit, the child tax credit and additional child tax credit, and education credits such as the American Opportunity and the Lifetime Learning Credit. These credits help families raise and educate their children. The Earned Income Credit is a refundable credit based on income and family size. Although mostly designed to help families, this credit is available to single persons and married couples with no children. There is an age requirement. Taxpayers must be between the ages of 25 and 65 to be eligible for the Earned Income Credit. And in all cases, the Earned Income Credit is determined based on a sliding scale based on the relationship between your adjusted gross income and your earned income. Earned income is defined as money received from a job, W-2, or net income from self-employment. That would be the 1099 NEC, and which is filed on a Schedule C. The Earned Income Tax Credit, also known as the EITC or EIC, is a refundable tax credit for low and moderate income workers. For the 2021 tax year, the Earned Income Credit ranges from a low of $1,502 to a high of $6,728, depending on your tax filing status, income, and number of children. People without children can also qualify if you fall within the guidelines for the credit. If you fall within the guidelines for the credit, you can claim it on your return when you do your taxes. If you didn't claim the Earned Income Credit when you filed your taxes in the last 3 years, but think you qualified for it, the IRS encourages you to let it know so you can get that money back. That statement about the going back to 3 years, that's because any taxpayer is allowed to amend their return for the prior 3 years. And also you have to file your tax return within 3 years from the due date. So now, right now, as of April 18th, 2022, because taxes are due April 18th this year, not April 15th, because there's a holiday in Washington, D.C. on April 15th, so the IRS is going to be closed. So the filing date is going over to April 18th. No one said anything this year about any extensions in filing dates or anything like that. So this coming April 18th is the last year for people to file 2018 tax returns, because they would do April 15th of 2019, and you have 3 years to file. So if you thought that you were eligible for a credit, even if you filed your tax return, you could go back and amend that return to get some of these credits if you feel you qualify, but you would only be able to do it going back to the 2018 tax year. So a single person with no children can qualify for the EITC if they have income up to $15,570. Over that amount, a single person will not qualify. A single person filing as head of household with a child, with one child, can qualify if they have to have up to $41,094 in income. So there's a huge difference in the income level between a person that has no children and a person that has one child. And then obviously, if the more children that are claimed on the return, the EITC will increase. For example, if your income falls into the highest range of the sliding scale and you have 3 children, you could receive a full refund of your taxes withheld, plus an additional $6,728 from the IRS. Regarding unemployment compensation received in 2021, unemployment compensation is fully taxable income. However, it is not considered earned income. In many cases, the calculation for the EIC will be thrown off by the addition of unemployment, which is unearned income, on the tax return, possibly reducing the amount of the Earned Income Credit for the taxpayer. The child tax credit was significantly changed for 2021. Most eligible taxpayers have already received half of their child tax credit, which was the maximum $3,000 per child, in advance between July and December of 2021. The advance payment was $300 per child per month under the age of 6, and $250 per child per month between the ages of 6 and 17. The advance credit received will reduce the expected refunds by the amount already received. The child tax credit is generally limited to your tax liability. However, if your earned income is $2,500 or more, or if you have 3 or more children, the excess amount may be refunded to you as additional child tax credit. Now, the additional child tax credit, you get it right on the tax return because that was not included in any advances that was sent. Now, as the IRS was sending out that form we saw earlier, the 1449C for the stimulus, they were also sending out this other letter, the form 6419, about the advanced child tax credit. But this form seems to be written more clearly, and it seems to be a lot better understood so far by the taxpayers that I've been working with. The form 6419 is being sent to taxpayers just to let them know how much advanced child tax credit they already received, because then they would show it to me or to any other accountants that they're working with, because this amount reduces the credit on the tax return. Education credits are available to students in college. And everyone knows that the high cost of going to college these days, you need assistance, such as tax credits. There's been a lot of talk about student loan debt relief and things of that nature. That doesn't seem to be happening right now. The deadline for extending, the deadline was extended for starting to repay student debt. It was pushed again to May of this year. It's been extended several times, but there's still no true picture of if student debt loan is going to be erased. So it seems like people that do have student loans will probably have to start paying them again in May. But one thing that has been available to parents, and in some cases the students themselves, are the education credits, the American Opportunity and the Lifetime Learning Credit. The American Opportunity Credit is available for the first 4 years of higher education at an accredited institution. The Lifetime Learning Credit is available for education in years after that, such as graduate school or advanced education, things of that nature. The American Opportunity Credit is 40% refundable in most cases. So to wrap up, the 3 major tax credits discussed tonight would be most likely to apply to the average taxpayer. There are many more tax credits that are available that can help taxpayers reduce their tax liability, and information on these credits can be found at www.irs.gov. Thank you for your attendance. Our next topic in our series will be an overview of the New York State personal income taxes, as well as an update on any issues that might be affecting federal returns.
Thank you so much, Kathy. As always, like very helpful information that you're bringing to our audience. I
You're
just saw
welcome.
like we really appreciate that, especially because this information changes every year on
It does change. It changed that all the information about the advanced child tax credit, that really changed. The whole thing changed with that. The amounts changed, the way they were administering it changed. So that was a very big deal for taxes this year.
And as we so the center, for those of you who maybe missed the beginning, we are doing one-on-one tax filing assistance. Kathy has been really kind, and she has been helping people file their taxes. And there are people who are surprised about not getting the child credit or the amount that they have received. They didn't expect that to be deducted or taken away from the total. They already received it, so they're not getting it now with the usual time. So yeah, it is important to be informed, and you know, I wish it would just stay the same every year, so we know what we're getting into and we know how to
That
file.
that would be too easy. Make too
Yeah.
much sense.
Right. Yeah, exactly. So there is someone that asked a question about or commented on like the form that they got from the stimulus, like saying like we got how much they got for the stimulus, and they thought
Uh-huh.
it was garbage, so they threw it away.
Well, yeah, that's the whole problem. Like people don't realize what this is because it never came out before, and it's just not clear what the letter is about. So, and that's the thing. It's like even the reason I had stimulus, the word stimulus in quotes in the slides is because everyone calls it the stimulus. Even the president was calling it the stimulus, but then you have the IRS calling it the economic impacts payment. And then you have it on the tax reform being called the recovery rebate credit. So it's like,
And it's all the same.
they should be consistent, you know? It's like, so of course, when you get this letter about this EIP, you don't know what it is because you've been calling it the stimulus the whole time. So yeah, it's okay if you threw it away because it's not taxable. So
Okay, good. So is there a reason why they need to know the amount that they have received?
yes, actually, there is a good reason for it. And actually, it does make sense that the IRS sent it out. They should have worded it much more simply because I mean, it seems ridiculous. I mean, to say, but I think if someone put $1,400 into my bank account, I would definitely know it and remember it. But, you know, a lot of people come in, and the thing was, this was almost a year ago. A lot of people don't remember if they got it. Some people think they didn't get it, and they did. So this letter is helpful because otherwise I have to say to people, you know, please check your bank statement. Because if we apply for it on the tax return and they've already gotten it, that's going to change their refund. It's going to change it by $1,400. It's better if people come in with the letter, if they have it and they, you know, realize what it is, or else they're going to have to know the answer to whether they got the $1,400 or not.
Right. All right. So do you know how they can get it again, or how they can find that information if they throw it away?
I believe that on the IRS website, you can check to see if you've received it. It's like one of the tools on the IRS, on the irs.gov. They have a portal for stimulus payments. So if you don't have the letter, I believe you can check on the website. But I think the best way is to, you know, to check your bank statement. Because even if you received it in the mail, you would have had to deposit it.
Right.
So.
Right. Thank you, Kathy. And this applies as to the advanced child credit as well, correct?
Yes. Yes.
Okay. Thank you. And can you briefly go over again, and I know you addressed it, about the students. There are many people who have been waiting to get that break with students loan, or have been waiting to hear what's going to happen with student loans.
Right. Well, the most up-to-date information that I'm aware of is what I mentioned, is that it's been pushed to May to start repaying student loans. Now, that deadline was already extended. I believe this is like the third time it's been extended. So I think there's a pretty good chance it'll get extended again. But, you know, on the other hand, this is just extending when you have to start to repay. It's not, you know, taking away the debt. All of the things that you hear in the media about student loan debt being forgiven, things of that nature, none of that has happened yet. It's just all talk. But what is also happening on tax returns this year, which I guess is good in a way, because for the whole pandemic and now up until May, people didn't have to make the payments. But consequently, people don't have the student loan interest to deduct on their taxes. Because when you pay student loan interest, that's a direct adjustment to your income. It's not a deduction or a credit. It's taken right off your income. So a lot of people have pretty hefty interest on student loans. So let's say someone has $2,500 in student loan interest. I believe that's the maximum that you can take off. That would directly reduce your income by $2,500. But now the last couple of years, no one's had that adjustment. because everyone's been, taking advantage of, rightfully so, not making the payments.
Right.
So that's another reason people are getting lower refunds, because a lot of the things that
That you were able
make your
to,
income lower aren't being, there's no reason to do them right
exactly.
now. So,
We'll see what happens to that.
yeah, hopefully they'll do, make the student loans forgiven. I mean, it seems like something that's always out there that they really should do.
Yes. And then finally, do you expect, or do you feel like should we expect any extensions, even though nothing has been announced yet?
So far, that's what I was saying in the beginning of the webinar, that so far so good. It's I don't think right now there's any reason why they would give any extension this year, like to extend the whole tax season like they did the past 2 years. There don't seem to be any really serious problems going on with them processing the returns. And also, they don't seem like they're going to make any huge regulation changes like they did last year. I mean, the reason it got extended into May last year was because in March, like right now, this time, they decided, oh, $10,200 of the unemployment is not going to be taxable, which is great. I mean, it was great for taxpayers, but what about all those people that filed their taxes before they made this decision? So I think all of that got straightened out. The IRS handled it, thank God, on their end, and they gave the people back the money. But all of that confusion and the whole situation with that was what made it go into May last year. So,
Okay, so it is
so
good
far it
news
looks
in
like
a
it's
way.
really April 18th.
But so if you didn't do your taxes and you expect an extension, don't keep waiting, just do them on time.
Yes, I
File on
think this year we
time,
have to do them on time.
right? So it feels like some people will be doing taxes like very close to each other. Just do the taxes for 2020, and you have to get it done. All right, Kathy, thank you so much again.
You're welcome.
It really you sharing this information, and again for attendees, if you haven't done your taxes and you'd like to take advantage of our 101 program, it is free of charge. We're doing you can check our website for more information, cwny.org, and we are doing it in Queensboro Hall next week, and then we'll do it for Taunton in Bayside, and so we have 2 dates for both locations. So Kathy will be happy to help anyone. For our upcoming events, we have the career workshop series. That is, sorry, this is wrong. We already did resume writing. I'm sorry for the outdated slide. But it is every first Thursday of each month from noon to 1 p.m. We may skip April because we do have a gala. We do have an annual gala, which is our biggest fundraiser. We encourage everyone to attend. We are honoring women of distinction, and a good guy has been helping women empowerment and women rights advancement. So join us if you can. Again, like the information will be on our website shortly. We do have the financial literacy series of workshops every first Wednesday of each
Third
month.
Wednesday.
Sorry.
Third.
And this is wrong. Again, like I guess I was not paying attention when I did this slide. So every third Wednesday of every month. And again, here we're doing it until April 6th, the 101 tax filing preparation. So sign up before then. If you'd like to join us and become a member to support the free programs that we offer, you can do it on this website. I believe Lan is putting that link in the chat, and you can donate as well. Both links will be on the chat. We are also planning many in-person events. We are doing gardening and sustainability starting in May in Fort Taunton, and we may have an April workshop in Queensboro Hall, and we'll do an art workshop. So stay tuned. Check our website for updates. We're finally open our Fort Taunton location, and we're very excited about that. Here are 2 locations and phone numbers. If you need to email us with any questions, email us at info@cwny.org. And we're also on social media, so you can follow us on Facebook, Twitter, Instagram, YouTube, and we do have a podcast as well. All right. Thank you for joining us, and we hope to see you next month. Have a good night, everyone. Good night, Kathy and Lana.
Good night.
Thank you so much.
Good night. Thank you. Good night.